Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Andy Swan. He's a co-founder at LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking American Express credit cards. You know, it's had a good run over the last year and a half. It's not hitting all-time highs like Visa and MasterCard, but it seems like they've got that other side of the business that the swipers don't in Visa and MasterCard. What kind of data are you guys seeing? Is this one getting lowballed here a little bit compared to competitors?
Yeah, I think it is. I think, American Express really fits in very well with, LikeFolio's thesis that the world is kind of moving towards, one big winner in each category, one best of breed. I think American Express is that. From a customer experience standpoint, it's really very clear that American Express is the preferred card of consumers. You look at consumer happiness levels at LikeFolio; those are very high versus peers. The number of people visiting Amex websites very high versus peers, and just that desirability for an American Express card, especially among the younger cohorts, is really growing, and we see that as extremely bullish for American Express's future. The future consumer is leaning towards American Express when they're making these decisions. And so, overall, I think American Express is in really good shape. We like the way that they approach the business. We like their execution. I think they do a good job of keeping, the delinquencies or the risk factor of carrying those balances pretty low and turning that into an income source that Visa and MasterCard don't have. So, overall, LikeFolio data is pretty bullish on American Express long term, but going into this earnings report, maybe a little bit more neutral.
Andy, I was in with a group of really smart people this past week, and we started talking about the differences and similarities between Visa, MasterCard, and American Express. And most people outside our little industry here, they don't realize that American Express holds balances and borrows and lends money where Visa and MasterCard don't. If you have a Visa or MasterCard, it's connected to a bank. The bank does that, right? They take the fees off the swiper. And here's the numbers. Last quarter, American Express, $8.4 billion from transaction, $3.4 billion from net interest income. So that's a significant part of what they're doing there.
Yeah, it is. And with that, they get that additional revenue. They also get some additional risk.
Sure.
They have to manage those balances as interest rates increase, as consumers, face a little bit of tightening or a little bit of financial pain. American Express is the one that could lose out on getting that payment, whereas Visa, offloads that to Citi or Chase or whoever they're dealing with on the banking side. So, American Express definitely has, a different business model. I agree with you. Most people don't realize it, but when you talk to consumers or when you look at what consumers talk about with American Express, it's a lot of it is about that experience that the American Express card brings, that prestige, whether that's deserved or not. I'm not sure. I think American Express does a little bit better job of customer service and having the back of the consumer, which I think shows through in a lot of the consumer happiness data. But, overall, I think this is a company we've liked for a year, 18 months now, and we continue to like even after the recent run in the stock. It's just we're at the point now, in this earnings cycle where, Tesla showed us yesterday and today that, Wall Street, if the stock has made a real run in 2023 or, is anywhere near recent highs, they better really outperform on their earnings like Netflix did in order to get bid up higher. Because I think we're in a little bit of a sell first, ask questions later environment.
Yeah, it kind of harkens back to the overbought levels that we're seeing in some of the indices and some individual names also. But Andy, I wanted to focus on the mentions chart that you guys have. Is this why you guys are a little bit more neutral due to the fact that, full year or mentions count still grinding higher after that dip in 2023, but now the stock price is far above those levels that you have?
Yeah, it is. Less people are talking about American Express. Some of that's some of the relationship with Delta Airlines. This is offset, I think, significantly by the consumer happiness levels and the web visit levels. I don't think American Express is losing out on business. They may be losing out on a little bit of the online conversation, but we're really not that worried about it. It's just we don't have any reason to be extremely excited with the stock at these levels. If we get a 10%, 12% pullback in the stock over the next, 3 or 4 months, then I think we'd be a lot more excited about potentially entering a position here.
All right, great stuff, great data as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder of LikeFolio, breaking down the data. I like that, the fact that they're relatively neutral, but they've got positive data. They're beating them.
I mean, the data is overwhelming.
Yeah, the happiness data and then also the visits data is higher, and this one's lagged some of the other ones. Net interest margin might come into play here, but Kev, how do you want to look at this from an example trade?
First, let's remember what you and I just talked about the U.S. consumer. Let's bring that back into
GDP.
this discussion. Exactly. Yeah. So when we're looking at that, how do we want to play this? Well, they're not expecting a big move, and here's another way to play it. If you're thinking, but we talk a lot about calendar spreads. We talk a lot about different spreads. How about this, Tom? Take the expected move, right, which takes you to right.